Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is October 31st, 2022, and today is Friday morning. So looking at the highlights of the day, the U.S. market surge. But first, no major economic events scheduled for today. So as we look at the various markets, starting out with the Forex symbols, they're not trading in tandem with the indices. And there's a reason for that, because on Wednesday, we have an FOMC Fed rate statement. So that's going to be big. And there's going to be a lot of choppiness before that. So looking at the Forex symbols, the major pairs tapering off, while the Dow Jones and the NASDAQ surged last Friday. Looking at commodities, gold and oil both lose ground. And looking at the stocks, Apple was the one that led the market higher and brought everything else except for Facebook. We're going to take a look at that also. And lastly, looking at cryptocurrencies, pretty much steady. So let's take a look at the markets and see what we can expect from today's trading. So here we go. We're looking at the Euro USD, and I would have expected the Euro USD to really be somewhere up here, okay? And the reason is that dollar gets weaker, okay, when the Dow Jones goes up, okay? And I would have expected it to rally even more, but it didn't. It stopped at 1, and it didn't hit that plateau on the USD. It didn't hit on anything. So I'm kind of guessing, and I don't like to go into numbers, that on Wednesday, when we do have the Fed rate statement, it's going to be a big hike and the markets are going to react to it accordingly. So just be aware that if that does happen, okay? So just, be on top of things. GBP also did rally a little bit on the dollar, did rally against the dollar rather, okay, to 115.90-ish level. But still, I would have expected it to be 119, 117. On the GBP, it is trading more correctly versus the dollar vis-a-vis the euro. Now looking at the Australian dollar also did taper off here at 64, so it is still very weak versus the dollar. And lastly, if we look at the Japanese yen, it's at 147, so it's still below our 150-ish level. So that's still a level where it's relatively stronger versus the dollar that we've seen in the past. Now jumping into commodities, looking at gold here, we did taper off 1640. If we look at a 4-hour chart, hit that 200-day moving average, and we're back down. So we're still pretty weak here. If we look at the gold, as it is getting weaker, and looking at the crude oil, did taper off after hitting $89 last week, and now we're trading at $86 within range. Okay, nothing completely out of character here as we're going into the winter month. Now jumping into the Dow Jones. Now this is where it's all at. Okay, look at this. So you have to look at a monthly chart just to give us a perspective here how big of a rally this was. This went from 28,800 to now 32,800. That's a 3,000 point move. Now last year our high was 36,500 and we sold off 8,000 points, and in a span of 2 weeks we've made back 3,000 points. That is a short squeeze. That's not a rally. It's not a bull market. It's a short squeeze, okay? There are, in bear markets, all these type of, gusts up just because you have so many people short the market, and all of a sudden, everybody's closing the shorts, and it just takes the market higher, okay? So to say that this is really where it should be, quote unquote, I think it's overstated, okay? The Dow Jones is kind of trading on its own right now and not really trading in tandem with the rest of the market. Now, if we look at the NASDAQ also did trade up 11,500. Now, if we look at the individual stocks, okay, you guys know that I like to go to the bellwethers. So let's take a look at Intel. Intel did make some real estate back, but still below $30, low is $24. It's $5, bounce. It's not a 50% bounce like we're having with the Dow Jones and the NASDAQ, right? So, you see that the stocks are still relatively weak compared to what's going on in the greater market. Now, looking at Cisco also did rally a bit, but again, nothing doing much. Now, what I do want to highlight here is Facebook. Facebook has a serious problem, okay? Trading at $99 a share. It is most probably going to continue selling off when the market sells off again, okay? It is weak. It is something that has broken the 3 digits, the $100, and has more downwards momentum potentially if the markets do turn around. So just keep this in mind as well. Now looking at Apple Now this did rally back. Now it's hard to see in these graphs how much we rallied back really, because we've made that we made that split back in July, and the graphs don't really represent exactly what's going on. But it does look like we're making that 50% retracement. If you look at 175 is our high, 155 is where we're trading, and we hit somewhere about 125. So we're about in the 50% range, which is more normal compared to the indices than we're seeing by most of the other stocks. Lastly, looking at Bitcoin, okay, this is where it's at, 20,500-ish level, not going down, not going higher. So it is relatively steady for now. Now, I do want to highlight this once again, FOMC meeting minutes this Wednesday night, and the Fed is looking to increase the interest rates because inflation is out of whack. And if they do, the markets do react to it as well. So just keep that in mind. We'll see you here tomorrow on the Daily Market Review. God bless everybody. Have a great day.